Good morning. It's been a couple of months since I last spoke and wanted to bring everybody up to date on the real estate market here in Southwest Florida, let everybody know what's happening. It is middle of July. It is hot and we could use some rain here. So sales are down about 16% from the prior year. I'll put this up on the screen here. And so one of the interesting things, though, is that we had 2,968 sales in the month of June for Lee and Collier County. And so just under 3,000. Last 2 years, as you know, the real estate market's been absolutely crazy. You can see the big jumps in sales the last 2 years. But if you go back to 2020, we sold 2,954. 2019, it was 2,958 units. And back to 2018, just over 3,000. So we're in a much more normalized market now than we have been the last couple of years. Yeah, every morning I come in, there's all kinds of headlines that I read on the computer when I get in. Here's one angle as to what's going to happen with pricing. Property values might fall soon. Here's how to prepare. That's from money.com. And then a glimmer of hope from Barbara Corcoran. She says, we could have a COVID housing market back before you know it. And she's talking about what would happen if interest rates were to drop. We'll talk a little bit about interest rates here in a moment, too. So overall, let's take a look at this graph here. And so sales price is down about 4% from the peak of, I think it was May or June of last year. So 4% down, not a significant decrease at this point. You can see it's kind of holding its own at this point. And you do see a big rise in the time on market. And so median time on market is 28 days. Still not too bad. I mean, if you go back and look at June of 2020, we were at 53 days. June of 2019, we're at 56 days. And June of 2018 at 54 days. So I do see over the summer, our days on market will increase. The slowness in the market, like I said, is back to normal. And we will see the days on market increasing. What's going to happen with inventory? One of the things that's interesting, here's an interesting article. It talks about golden handcuffs lock up Florida's housing supply. And they're talking about, I think it's like 90% of the people in Florida have interest rates below 6%. And so they're talking about them not wanting to move because if you move from a 3% interest rate to a 7.5% interest rate, your monthly costs go up significantly. So people just aren't putting their homes on the market. There's really two types of sellers right now. Sellers that are extremely motivated. They've decided that Florida's not where they're going to be next season, and they're anxious to get out. And then there's the other type of seller that is, hey, if I get my price, we'll move. If not, we'll enjoy another fall and winter down here. So let's take a look at the active number of listings. And so here you can see that inventory listings are up about 22% from the prior year, so a decent amount up. But if you look, hey, we've only got a 5-month supply of inventory right now, and so that's a neutral market. That's not a buyer's market. That's not a seller's market. So we're very much in a neutral market. And again, if you go back and look at the active listings, so we've got just over 15,000 listings right now in June of 2023. If you go back to 2020, we had a little over 18,000. If you go back to 2019, we had over 20,000. And if you go back to 2018, just under 20,000. So we're still about 5,000 units short from a normal market. So what are some of the pitfalls that buyers face right now? One of them, this came out yesterday. Farmers Insurance is exiting the Florida marketplace. Yet another insurer that is leaving Citizens, one of the last resort for insurance is becoming, in some cases, the only option for insurance. And insurance costs have gone up. And so flood insurance is up significantly, and homeowners insurance, people are looking at 20-30% increases pretty easily. So facing insurance increases is one of the issues. This is an interesting one. This came out the other day, too. This is Florida now has the highest inflation rate in the U.S., and a lot of that is housing. So people still want to move to Florida. They're moving down here in droves still, and so that's causing the inflation rate to be higher. The insurance costs certainly don't help that. Interest rates. And so interest rates, it's interesting. I was working with a couple this weekend. They pre-approved, solid financially, and their quote, their pre-approval was at 7.75%. And so I was surprised to see it was that high. So if you look at this graph, this is kind of the historical rate of mortgage rates. And so I bought my first home, I think back in 1990, and I was over 10%. It was definitely double digits. There are people, I think my parents probably had one in the teens back in the 70s. And so you see we've had this pretty low run, and it's jumped up here. Rates may go down a little bit, but I don't think they're going to go down significantly, certainly not in the short run here. And so it's easy to talk about, well, what impact does that have? 3.5 to 7.5. Yeah, okay, it's up. But what does that really mean in dollars and cents? So take a look at this screen here. So median price we talked about was $450,000 earlier for a home in June in Lee and Collier County. So if you had a 3.5% interest rate, which we did 2 years ago, your principal and interest payment would be just over $2,000. And if you pulled a mortgage today at 7.5%, your mortgage is now over, your principal and interest portion of your mortgage is now over $3,100. So that's an $1,100 a month increase just because of interest rates. So nothing else has changed. That doesn't factor in the higher cost for insurance. So your principal and interest is up 56% with that increase in interest rates from 3.5 to 7.5. So that impacts buyers. That takes people out of the market and certainly gives them pause to decide, hey, is now the right time to move forward. A couple other categories that we look at each time we meet here. And so one of them is the homes in Cape Coral over $1 million. There are close to 300 homes right now in the Cape, over $1 million, I should say. And we've sold 21 in the month of June. And so right now we have a 14-month supply of homes over $1 million, which means the average time could be 14 months to sell through the existing inventory. And again, if you look back 2023, we've got 14 months. In 2020, we had 14 months. In 2019, we had 32 months. And in 2018, 15 months. So again, much more of a normalized market for the higher end too. Fort Myers Beach, a little interesting story here. So this is only the condos. And so most of the condos are not ready for occupancy yet. I think the first ones that I've heard are probably coming up maybe in November. There are some complexes down there that probably won't be ready till after season. And so they're still trying to sort out insurance, trying to get contractors lined up for these projects. So right now, Fort Myers Beach has 184 homes condos on the market, and they sold 11 in the month of June. So right now, we've got a 17-month supply of condos on Fort Myers Beach. And if you go back at 2020, it was 9 months. 2019, it was 10 months. And in 2018, nine months. So something's going to have to give there. There's interesting thoughts. With the number of homes that are being torn down on the beach right now, you won't be able to live on the beach for under $1 million here very quickly. So sellers are thinking, okay, don't sell yet. Let's get the place up and running. Let's start to see some of this new construction coming in. Prices will sustain or go up, and buyers aren't willing to pay the special assessments. It's the unknowns. A lot of these associations don't know what the dollar amount's going to be for the assessments, kind of waiting to see what insurance is going to cover. So it's going to be interesting to see what happens on Fort Myers Beach. Over on Sanibel and Captiva, in the month of June, we had 246 houses and condos on the market. They sold 41, so that's a pretty decent ratio. And you can see inventory starting to come down, and sales are bouncing back. So people are anxious to get back on Sanibel. Right now, we've only got a 6-month supply of inventory, so very much a neutral market on Sanibel. And if you go back to 2020 and 2019, both of those were 15 months of inventory, and back in 2018, it was nine months of inventory. So I think it's what's going to happen the rest of the summer. It's going to be pretty quiet here. So it's going to be a calm summer. I don't see prices dropping drastically. I think sellers, if they're planning on coming back, they're just going to take their houses off the market. They're not in a big hurry to sell. And again, some of the sellers that decided, hey, we're not coming back, and let's get this sold before we have, before we're paying property taxes, our insurance costs are going up. So those are going to be the motivated sellers. Buyers, there are going to be some opportunities out there to purchase, and so look for those. Homes that have been on the market that you're seeing big price drops or consistent price drops, those are probably the motivated sellers. Real estate agents also help us say, hey, really motivated seller. And so those are where the opportunities are going to be to pick up some deals over the next couple of months here. So again, I do think it'll be a quiet summer, great time to look and start lining things up. Thanks for taking time out of your day to watch this. I'm Frank Ehrhardt with John R. Wood Properties, Christie's International. And if there's anything in the real estate world that I can help you with, please don't hesitate to contact me. And have a great summer, and look forward to talking with everybody soon. Take care.